Okay. Hi, and welcome to Music and Money Mondays. I have another question straight from my inbox. This one came to me via text message, and this person wanted to know, why do I owe every year? So I definitely want to answer that question from the perspective of someone who has a Schedule C or a 1099, a business owner, and from someone who is a W-2 employee. So let's start with the W-2 employee first. If you are a W-2 employee and you owe every year, that means that your withholding is not withholding enough, okay? So there's a form that you have to fill out when you're hired, and usually you can go back to HR if you want to modify your withholdings. But basically what you're indicating on that form is, this is how many dependents I have, I'm married or I'm single or I claim head of household. And I'll do another episode on what each of those means. But those forms is where you tell the government, or I'm sorry, you tell your employer how much money to keep out of your paycheck so that you can pay your taxes and not owe at the end of the year. So if you do owe at the end of the year, then that means that you do not have enough money coming out of your paycheck. So you need to travel on over to HR, get another withholding form. It's a W-4 withholding, and if you're in Louisiana, it's an L-4. Texas doesn't have that. So you need to go back to HR, get that form, and you need to make sure that you are accurately reflecting, number one, your dependents, and number two, your filing status. Now, this is a little tidbit for the people who are married. This is just my advice, okay? So this is my disclaimer, this is my suggestion, this is advice. If you have someone, you two are both married, I do not believe that both of you should be claiming married with a spouse on both of the withholding forms. I think that in some instances that kind of gets misconstrued. It's okay to get a little money back at the end of the year, but I usually encourage my people, one person should be filing married and I have a dependent, or I have a wife, or I have a husband, and I think the other person should just kind of maybe withhold at a single rate or maybe a head of household rate. But I would not encourage you to just both of you claiming married, because usually that's when you have circumstances where the couples owe. So talk to your tax preparer. They can kind of give you more insight into what's best for you. But that is definitely something that I see a lot, where it's two married people, both of them are claiming their spouse and they don't have enough withholding coming out. So going to our 1099 people, if you owe at the end of the year, I'm sorry, but newsflash, that's your life now, okay? You will owe if you are a Schedule C and you receive a 1099. It is just something that happens. Now there's two options for you. The first option is you can kind of prepare your tax savings throughout the year based upon what your tax rate was for the previous year. So if you fell into the 20% tax bracket, then you may want to consider kind of stashing about 20 to 25% of your net revenue, which is basically what you have left over after your expenses have come out. That's one option. Another option is, and we give these to our clients when we prepare their taxes, you can have vouchers where you pay your taxes quarterly in anticipation of what you think you're going to owe. So you can say, oh, last year I owed $10,000. So we will give you a quarterly voucher, or you can find a quarterly voucher where you either mail in $2,500 a quarter, or you can log in online to the IRS's website and make quarterly payments. So those are some options to kind of not have that huge tax liability. And the beautiful thing is, when we're preparing your taxes, we're going to say, oh, you've been making payments all year. Let's incorporate that. And if you don't owe after your payments have been made all year, then you'll get a refund. And if you do, then maybe there's a supplement, but it's not going to be that huge lump sum of $10,000. You might say, oh, well, we made a little bit more, so now, we have to only pay an extra $1,000 out of pocket. So those are some options to consider, but that is how you know how you can avoid having that huge tax liability at the end of the year for our W-2 people and for our contract laborers, okay? So I will see you guys in the next episode of Music and Money Mondays. Please send me your questions and give me some comments below. Thank you. See you next time.